Yesterday, the European currency fell after a strong rally driven by US inflation data. The British pound also suffered heavy losses in late trade. However, the risky assets managed to recoup some of their losses, supported by downbeat statistics from the United States. In particular, traders digested data on US initial jobless claims, which came in hotter than expected. In addition, US housing starts and building permits fell in April, reflecting high interest rates. Nevertheless, the euro and the pound sterling remained under pressure. With no driving forces to help them gain value today, the risky assets are likely to extend weakness. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. It includes a speech by Bank of England policymaker Catherine Mon and April data on consumer price growth in the bloc. Eurozone annual inflation is expected to be 2.4% in March 2024, down from 2.6% in February. Core inflation is forecast to cool to 2.7% from 2.9%. Suppose the data confirms subsiding prices pressures in the euro area and thus vindicates the European Central Bank's decision to cut interest rates in early summer. In that case, the euro is expected to resume its bullish run and even hit a new one-week high. If price pressures remain elevated, it will complicate the regulator's task but is unlikely to cause it to refuse to ease monetary policy. As for US statistics, traders may take notice of the Conference Board's leading economic index and Fed Governor Christopher Waller's speech. If the policymaker reaffirms the central bank's commitment to maintaining tight monetary policy, demand for the greenback will likely increase by the end of the week. In turn, the risky assets will plunge after failing to resume growth. Now, let's consider the euro-dollar pair from a technical perspective on the 1-hour chart. If the price breaks through and consolidates above the 1.0866 level, the volume of long positions will increase and the European currency will head towards 1.0893. If the price breaks above this mark, the way to 1.0918 and 0942 will open. However, the euro is unlikely to reach these highs as there are no driving factors that could contribute to such a significant rise. FL's breakout at 1.0866 will generate a sell signal. If the price breaks below yesterday's low, the euro will face a major sell-off, diving to 1.0836, where I recommend opening long positions on a false breakout. Going long on a rebound can be considered at 1.0805, expecting a 25-30 pip move. Speaking of the pound-dollar pair, a false breakout at 1.2643, yesterday's low, will make it possible to open long trades. If the price breaks above 1.2671 and tests it from the top down, the British currency will have a chance to climb to 1.2697 and even 27.34. Where it would be wise to go short on a rebound to catch an intraday correction of 30-35 pips. Going short at 1.2671 will be irrelevant in the event of a false breakout. In this case, sterling will dip to 1.2643 as a part of a bearish correction. If the price breaks below this level and tests it for the bottom up, the British pound will most likely nosedive to 1.2615, where traders can go long on a false breakout. Long positions on the rebound can be opened at 1.2583 in anticipation of a 25-30 pip correction. Good luck and have a nice weekend.